Boom, $70,712 as an itemized deduction because he has a home. He actually got a fat refund of $13,679. He's going to have a carry forward of $139,898. If you're a W-2 worker and invest in real estate and you always feel like you're overpaying taxes, in this video, I'm going to show you the traps of saving money, show you how buying a home wiped out half of this guy's income and how you can do it too, and how buying rentals are creating a trap bank of losses and how to unlock those losses. My name's Tony Hong. I'm a licensed CPA, a certified public accountant. I'm the owner operator of the CPA Dude. I got a team of 51 and we help clients save millions of dollars every year. And by the end of this video, you'll know what to do and what not to do for your taxes next tax season. All right, welcome back to the audit. This is where I'm taking random people's tax returns and auditing them to see what they did well and what they did not do well and seeing if their CPA messed it up. And by the way, this tax return is actually not random. It's a guy in the community that I'm in the Bay Area with. He supports, reached out, and I was like, want to show love back to him here. And if you want your tax return audited, just DM me on Instagram, the CPA Dude, and tell me that you want your tax return audited. All right, so let's dive in to show you the good, bad, and ugly. We have a big mistake here. I don't want to say it's a mistake here, but he has interest of $2,692. So that's $11,996 that's getting taxed. So you think having a high yield savings account is great, but did you know he's actually paying income tax on it? So if he had a 4% savings rate, and this guy's very low, it's only 8%, he's only getting 3.68 of his high yield savings account. But let's just say you're at 30% tax bracket between federal and state. That 4% high yield savings account is only 2.8%. 1.2% of your interest income goes to Uncle Sam. And the same goes for his dividends. So instead, what he could do is actually move this money into a different account if it's economically feasible, an insurance account specifically. And at 8%, he would save $959 a year. And if you haven't pulled out your tax return to follow along, pull yours out and follow along. If you got big amounts there and it makes sense to have life insurance, move the money out of those accounts. All right, something amazing here though. This is why home ownership is good and why you need to stop making excuses like you don't want to buy a house. Boom, $70,712. This dude's income was $154,000. He has an itemized deduction of $70,000, 8% of his income. This is a really good thing. This show's not about only bad things you did on your tax return. It's also about the good things that you're doing. Wouldn't you want the government to give you a 45% discount off of your tax? Looking at the main page. So let's go dig into his itemized deductions now. $43,150 as a mortgage interest expense. So what this means is that he bought a home, he had to pay mortgage interest on it, but the government is giving him a tax deduction on that. It's reducing his taxable income by $43,158. On top of that, he has a little bit of investment interest of $45. So the interest write-off that he's getting is $43,203. He's going to save $3,456 on his taxes. But this is because he's at the 8% rate. This is a lot higher if you're in a different bracket. But $3,456, that's practically almost one mortgage payment. And the second cherry on top here is that he can now write off his taxes. So right here, he's got state and local taxes, property taxes now to $12,973, and then $325 of his car insurance, bringing up that total of $26,506. And he actually made some charitable contributions of $1,003. So total itemized deductions he got was $70,712. Like I said, 45% of his income was shaved away. So in total for his itemized deduction and adding $5,656. And early on the interest and dividends, that was $959, bringing us in for a grand total of $6,615 that I found so far on this tax return. All right, and then this is the controversial part here, refunds. He actually got a fat refund of $13,679. But let me tell you, my friends, refunds are stupid and not good. When you get a refund, that means you're getting a refund of your own money. And let me tell you a secret. The IRS does not give you a refund with $13,679 back. But in all reality, if he would have just taken this money and dialed in his withholdings, he could have saved $1,094, $12,432 in this guy's instance. He had $26,111 withheld. So it was over withheld by $13,679. So what I want you to do is know how much do you truly owe in tax. That's going to be your row 24 on your 2025 tax return. Compare that to how much money they're taking out of your paycheck and make those as close to zero as possible. Or else you're gonna be like this guy and leave $1,094 on the table that the IRS is never gonna give you. All right, so we're up to $7,709 unraveled in this tax file. My dad was a gambler and I probably could have been a trust fund baby if he didn't lose so much. But unfortunately, we have a $52,644 loss here. And the positive thing though is that he had a $22,747 gain. So that means the 52 grand could go offset the 22 grand here. And previously I can see his trading habits. He had a $110,000 loss here. So not the best trade by all means, but hey, there's a silver lining in all of this. This is actually called tax loss harvesting. So if you have losers or bad stocks and you have gains from other ones, the losers will actually offset the gains. So this guy actually made $22,000 trading short-term stocks, but he was able to offset and not pay any capital gains on that because he had a loss of 52 grand. So here he did the right thing. That was his $1,819 in tax savings by utilizing tax loss harvesting the right way. So we're up to $9,528 in tax savings, and the good things of that he actually did and the bad things that he missed. And because he was not the best stock trader, he's gonna have a carry forward of $139,898. So my pro tip here would be to go get short-term capital gains to unlock this big piggy bank of losses that he has. All right, I saved the best for last. So if you're still here, I want to reward you with something first. If you need any help with your tax plan and you're like, dude, I don't know if my tax returns are messed up, this is actually what me and my team do. We have a tax savings blueprint and look at your last 3 years of tax returns, look at your current situation, build you a full tax plan. And if we don't unravel a big amount of savings compared to what we actually charge you, we will refund you in full. And if you're interested in that, go to the link below, book a call with my team, see how we can even help you out before you pay us a single dime. All right, so now let's get back to the audit red flag. 100, 200, 400, 700. These are all flags, my friends. This is a rental property that he has, but this is a red flag for the IRS because these are all round numbers. The only round numbers that are not on here are depreciation and mortgage interest and the auto and travel. Else ends in 00. And what happens here is that they know that not all expenses end in 00 all the time. So because of that, that's just a massive red flag. And I'm just like, oh, this is not good. So when you're reporting your Schedule E for your rental properties, your business, any expenses, make sure you have invoices and receipts that actually document and support them all. But when they're all around 00, you're just asking for an audit to happen. So watch to improve your books here. I'm sure these expenses are actually right and in the exact dollar. Besides that, nothing too wrong on his Schedule E, but let me tell you, there's this magical one. If you're still following with your tax return, you're a real estate investor. If you have this form called the 8582, this is where a lot of money gets held down. And this is where he has a huge opportunity to actually get a lot of money back, but he's just invested. So right here, this big number, allocation of unallowed losses. So here he has a massive piggy bank of losses. He's invested in 3 different partnerships. They're all losing money, and I'm sure they're related to real lose money. But the big gripe that I have here is that we have a big piggy bank that you can't use. And this is where people, they think that buying real estate is going to help them immediately. It does not. It will in the future, but at least you'll get your rental income tax-free, but it does not reduce your W-2 income this year, unless you're a short-term rental, real estate professional status. But usually if you're just buying long-term holds, this is not the case. And in this case, he's got 3 partnerships that's generated $127,000 of losses in this piggy bank. And it's trapped. He can't use them until he sells that property, has a profit from that property, or this is the key part here. And if you're a W-2 and you're a real estate investor, this is some good tips for you. I was advising this guy, this is back to your CPA, but I would want him to get into deals where he's going to get positive passive. For example, we got different deals that our clients use, and one was a motor car fund. He invests into BMW deal at $12,000 of income automatically each year. But the cool thing now is that he can use this $127,000 to pull out and offset that $12,000 income. So in this scenario, he would get $12,000 of income and save $960 in taxes and have all that in his bank to use right away, because we're able to start unlocking losses that he has in his taxes. So totaling that up, that's $10,488 that we found in this episode from a recommendation / like what he did well. And overall, not bad. If I had to grade this, I'd give this a B-, C+, audit flag. they can make mortgage interest deduction. And thank you so much for watching. If you could do me a massive favor, if you could subscribe and send this to anyone that would be applicable and they're in this pickle like this guy, it would mean the world to me as we're trying to grow, spread out the information. I'm just seeing so much crappy work by other CPAs, self-prepared stuff. I just want to like make sure you don't overpay in taxes. And if you want your own return audited by me, just DM me on Instagram, the CPA dude, and I'd be happy to help you out.